Wasabi wallet. Unfairly private.
What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before diving in, of course, I have to give a big shout out to sponsors of the show, Ledn.io. This is where you can use your Bitcoin for a couple of different services. The first of which is to stack extra sats with your Bitcoin. So they have a Bitcoin savings account where if you deposit, then you get interest paid on your Bitcoin in Bitcoin. And secondly, you can get a loan. So use your Bitcoin as collateral to secure a Canadian or US dollar loan. And that sits in a dedicated account where it is auditable 24/7. So if you want to check out either of these services, you can click the link down below. And if you opt to get the loan, then they will also credit your account with an additional $50 worth of Bitcoin. And secondly, of course, privacy is an important thing, especially when you're dealing with Bitcoin. And one of the things that I use regularly is NordVPN. I have this on my phone and my computer. And what it does is it hides your IP address, it encrypts your browsing data, and it has a few other added benefits, including unlocking geo-blocked content. So if you want to check that out with my link down below, you can get a deal where it's only $3 per month. And with that, let's dive into the news. So Binance did some research recently, and it appears that Bakkt is at least partially to blame for the bearish September that we've just gone through. So Bakkt, if you can't remember, was the team that was putting together a futures contract system where you can settle the contracts in physical Bitcoin. So you can basically speculate on the future price of Bitcoin, and it has to be settled in Bitcoin as opposed to cash, where no Bitcoin actually changes hands on the speculation. So the launch kind of fell flat. There wasn't a whole lot of volume going through. The first week had about $5 million, which is actually really not that much. The first day was only, I believe, around $280,000. So pretty piss poor initially. So there's a lot of hype around this. I think it's a little case of buy the hype and then sell the news. So that could be a big part of it, but also the other part of it is that the CME futures were actually settling around the same time, and if large players had a lot of interest in having the price of Bitcoin low to get the returns on their speculation, they could have been dumping behind the scenes as well to ensure that. And again, this is just a symptom of it's very early. Institutional players are kind of starting to dive in, and they've got a lot more capital to play with. So we may continue to see things like this in the future, where prior to certain contracts expiring, we see sudden moves in the price with background manipulation happening. Anyways, we're going to move on from there. Just recently, we saw a mining farm go up in flames, and roughly $10 million worth of Bitcoin mining equipment and ASICs essentially be destroyed. And so this may be in part to blame for the hash rate kind of dropping a little bit. In my opinion, it's not enough to make that much of a dent, but we could have seen a little bit of a dip because of that. So it's important to know that Bitcoin hash rate is not an exact science. It's actually more of an estimate based on the speed at which blocks are being mined on the Bitcoin network. So we did see a dip in the hash rate just recently, where it appeared that the Bitcoin hash rate dropped by nearly 40%, but then it bounced right back up. So it appeared to be just an anomaly of a few blocks taking longer to solve than the average, and that tended to skew the perceived hash rate at the time. And actually, in the same vein as that, the Bitcoin network just experienced its slowest block in 5 years. Now, again, this is very likely, in my opinion, to be a statistical anomaly, but this one block took nearly 2 hours to solve, 119 minutes. Again, Bitcoin blocks are supposed to be solved roughly every 10 minutes, but it can vary. What contributed to the apparent slower hash rate or the drop in hash rate on the chart previously was a number of blocks that took upwards of 50 minutes, in some cases 60 or above, to solve. So there were about 5 blocks that appeared to be anomalies that were quite a bit slower than the rest. Again, the last time that we saw a block this slow was back in 2014. It's only happened 10 times in the history of Bitcoin. Has there ever been a block slower than this? But as we've seen, obviously, again, Bitcoin blocks are not a set amount of time. The way it works is actually, as a Bitcoin miner, you're trying to randomly guess or randomly generate a value that is lower than a target value. And there's no way to just jump in and generate that value. You have to randomly hash and hope that you get a value lower than the target. And that target is actually has to do with the Bitcoin difficulty. The lower that target is, the more difficult it is to mine Bitcoin blocks. So if there's a lot of miners coming on to the network and blocks are regularly taking longer than 10 minutes, then that target will that target will if Bitcoin miners come on and they're regularly mining blocks faster than 10 minutes, then the target will lower. And the inverse is true. So in this case, if the fact that we've had some slower blocks recently ends up impacting the perceived hash rate enough so that it seems that we're mining blocks quite a bit less often than the targeted 10 minutes, then it could actually drop the difficulty, meaning that miners have to be essentially aiming to create a value that is below a much higher targeted threshold. So essentially, what you're trying to do is you're trying to solve a value, and you're trying to randomly generate a number that is below a certain amount. So to simplify it, let's say I wanted to randomly generate a number that was below the number 1,000. If I generate a number that's anything above it, then I don't successfully mine the block. But if I randomly generate a number that is below 1,000, then I win the block, and I just have to prove that I did my proof of work. So Bitcoin is kind of like this, but you're not just generating a regular digit. It's alphanumeric number that you're trying to generate. Anyways, essentially all that happened here is a very slow block, and it may impact the difficulty level the next time around. A Russian nuclear scientist got a fine for something that they did back in, when was this? Earlier in the year. So what happened was a few Russian scientists working at a nuclear facility, they created a program that was difficult to see, that was essentially using the power from the nuclear plant to mine Bitcoin. Anyways, they were fined in the end for $7,000, which appears to be probably quite a bit less than the profit that they got from actually mining the Bitcoin. The lawyer, somebody representing them, said that I can say one thing for sure: they were not detained on the first day that they began to mine. Essentially alluding to the fact that they've made far more profit than the fine that they've been levied. Let's move on. Speaking of fines, oh my God. So the SEC officially fined block.one for their EOS ICO that they had, where they raised $4 billion. And the fine that they got slapped with was a measly $24 million. So in a roundabout way, what the SEC is saying here is, hey, ICOs and unregistered securities are totally fine. Just keep a small portion of it so you can pay us off. That is the message that they're putting out here. In my opinion, absolutely ridiculous. It really paints a picture that the SEC is not actually going to hold anybody accountable. They just want to be paid. You need to pay to play. And this is kind of the reason that I think that the toxic Bitcoin maximalists are actually quite necessary, because you have an entity that came out and said, hey, we're promising all of these things that it wasn't even sure that they were technically possible, and they've very much not been able to deliver on a lot of the things that were promised. And I believe that they fully deceived investors, and a lot of investors got super screwed, especially after the fact, after the launch of the ICO as well. And these guys get a free pass. And so, again, I do believe that companies should be able to raise money as they please from independent investors without having to go through regulators. And I do believe that in the end, without regulation, people would start to learn and actually be smarter about where they put their money, rather than having to be babysat. And then when stuff like this comes up, people have no idea how to perceive value. But that's not the way it is currently. And so I think that the maximalists just need to take the position of calling out bullshit and trying to help educate the public, because clearly the SEC is not going to take that job seriously. And yeah, this is just the world that we live in. So I do see a positive to the toxicity. It's just an effort to educate people on what's actually happening. Whereas the SEC is just, give us some money and we'll make this go away. And finally, I'm not even going to dive into this article, but if you need another reason to stack sats, just a fun fact, the Federal Reserve printed another $63.5 billion this week. So stack those sats, avoid that inflation. With that, I'm going to wrap up here. I hope you guys are all having a wonderful day, wonderful evening. If you're new here, of course, hit like, subscribe, and share. Always hit share. It's great to get new people watching. If you want to support the show, you can hit up Ledn.io. You can hit up NordVPN, and actually check out Wasabi Wallet. And with that, I will wrap up here. And if you really like what you saw, you can always drop me a tippin.me Lightning Network tip on my page there. With that, I will head out, and I will see you guys tomorrow for your daily session.